Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. What we call them Wall Street firms like Merrill Lynch, UBS, Wells Fargo, Bank of America, and Morgan Stanley. A Bitcoin ETF, not a single one has added Bitcoin to its system yet. All of them are doing what they need to do. That's what I think will happen in the next few months. It might not be one of the big ones, but an independent RIA like LPL, which tends to move a little faster. Cathie is the founder, CEO, and CIO of Florida-based. ARK Invest is an investment management firm that oversees a number of actively managed exchange-traded funds that are built on disruptive technologies such as gene editing, blockchain, robotics, AI, and energy storage. This year, the U.S. Securities and Exchange Commission gave the company its ARKB. We were approved for spot Bitcoin. Bitcoin exchange-traded funds ETFs have been the talk of the business world all year because they have set and broken many records for exchange-traded funds around the world. Recent sources say that the ETFs had 3 days in a row of inflows starting on Tuesday after big withdrawals. $15.27 billion has come into U.S. spot Bitcoin ETFs. Peter Diamandis says that BlackRock's elliott, which raised $11.3 million on Tuesday, now has 312565 Bitcoins worth $8.26 billion at the present price. Cathie doesn't believe the growing doubts about the success of ETFs and the crypto bull market. Cathie believes we are now halfway through the bull market for cryptocurrencies in 2024 to 2025, and that record highs for Bitcoin and other cryptocurrencies could happen in the coming weeks. The first is that Bitcoin ETFs will be offered by Morgan Stanley or UBS. Cathie is sure that this will happen before 2024 and that it will have an immediate effect on the price of Bitcoin. Bernstein research analysts gave estimates in a June research note that fit Cathie's timeline. Bernstein analysts think that between Q3 and Q4 of this year, big wirehouses and large private bank platforms will approve spot Bitcoin ETFs for listing on their platforms. This will cause Bitcoin and other cryptocurrencies to go up in value by a huge amount. It's also time for Cathie to talk about her $1 million Bitcoin price forecast and the next step for ETFs. Set up post notifications and like the movie if you want to see more like it. Thanks. Just like you, we did enjoy an almost 100-fold rise in NVIDIA. The split stock went from about 40 cents to $40, and now it's worth $120. We still own it in some of our more specialized portfolios, one of which is more focused on AI. But we thought, okay, $3 trillion company, gross margins in the high 70s, and its main customers, the cloud customers, have lower gross margins than that. There are a lot of people in that group. The history of hyperscalers shows that they decide to do something when they see that it makes business sense for them to do so. That sounds like something we should do. That's something we can do. They have a lot of money, you know. You should know that NVIDIA is a great story. Thanks to Jensen Huang and his team, they are also going to change from being a hardware-only business to a software and platform-based company. Now, will that be possible in a competitive market? As I already said, all of the hyperscalers are making their own chips, right? Some of them are more general purpose, and some, like Tesla, put that in a hyperscaler and made their own chip. One NVIDIA chip has already been taken out of one of its cars. And I think that Dojo will fully verticalize it in the end. And Elon said that during an earnings call. We know that he was trying to get more NVIDIA GPUs. He said a few quarters ago, building a chip is really, really hard. Things could work out, but it's very hard and the chances are not good. And then, surprise, he not only has all the chips he needs, but also gives some away a few quarters later. It didn't make sense to me. I am sure it was okay. Some from Tesla to X. This brings up the question of supply and demand. I think what's happening in AI, and I'd love to hear your thoughts on this, Peter, what we're seeing and hearing about this from Palantir, is how much time and planning it will take for these big companies to move into the AI age. And every one of these businesses works with big businesses. What should they do? The first thing they need to do is gather all of their info from different places. A lot of their info is stored somewhere they don't even know about. It needs to be gathered, cleaned up, integrated, and processes need to be mapped out in great detail. And what we're seeing now is that the cycle, which means the economic cycle, is a little more unsure. There are clear signs that the customer is very weak in some areas. This is a strategic choice that companies have to make, and they're going to put a lot of resources into it. Although buyers love cryptocurrency-based ETFs and they've had huge success, advisors and wealth managers are still not fully on board with them. A new study from Cerulli Associates says that only 2.6% of advisors tell their clients to use cryptocurrency, and another 12.1% will do so or talk about it with their customers if they want to. About 80% of the money that has gone into spot Bitcoin ETFs has come from buyers who use online brokerages to do their own research. This was said by Samara Cohen, who is the Chief Investment Officer of ETF and Index Investments at BlackRock. It will likely be different later this year, when wirehouses finish their checks and start listing the things, as we just talked about. James Seyfarth is an ETF analyst at Bloomberg Intelligence. He said that a lot of the biggest investing networks, wealth platforms, and wirehouses haven't fully accepted Bitcoin ETFs yet. At this point, those advisors or brokers can only buy a Bitcoin ETF for a client if the customer specifically asks them to. James also said he believes things will get a lot better by the end of the year. This will allow more financial planners to offer spot Bitcoin ETFs to their clients. Likes this idea? Let's make the first announcement between now and October. That's 6 to 9 months after the goods first went on sale in January. Here are some more interview clips. That doesn't mean the price rise is half over, because prices tend to go parabolic at the end of a bull market. We don't know where that came from, but we're very sure that we're in the middle of the bull market based on chain data and a 10-year history that goes back a little further. It's interesting that since ETFs came out in January, a lot of people have thought, okay, the boom, and we've had a great showing, David vs. Goliath, we're still fighting and are happy with where we are. But as of now, none of the big banks, we call them wirehouses, have added Bitcoin to their platforms. That means they haven't added a Bitcoin exchange-traded fund ETF. All of them are doing what they need to do. I think one will happen in the next few months. It might not be one of the big ones, it might be a small independent RIA like LPL. They move a little faster. Once you find one that has a spot Bitcoin ETF on its website, the bull case is over 1.5 million in 2030. Our base is around $650,000, which means that by 2030, it will have grown 10 times. There are 3 big pieces that make it up. One is institutional, and I would put it sounds like retail distribution, but these are people who make decisions at banks like B of A and Merrill Lynch. That's one. The second is that this can be used instead of gold. That's why we think it will take over half of the gold market, especially since younger people want to spread their risk. Then there's the insurance plan. In emerging markets, I recently went to El Salvador and had the pleasure of meeting their top leaders. They are leading the way by making Bitcoin legal tender and giving their people access to it. Other countries can follow their lead. My teacher and friend Art Laffer came with me on this trip, and I think he will work for that government. It's only worth $30 billion. Do you really believe that? Wow. In this case, they're going after it, which is very advanced. They are making changes to taxes that will support new ideas. Cathie thinks that the U.S. economy will have even more hard times in 2024. This will cause the Fed to cut rates in a way that doesn't make sense later this year. In a speech last month in Hong Kong, Cathie said, "We think we're going to see surprisingly large rate cuts this year. We believe that rates will go down because of the rolling slowdown that has been happening in the U.S. and isn't being shown in the news." In the No broadcast from last month, Cathie also talked about key economic signs and market signals that she thinks show the U.S. economy and markets are in for some rough times ahead. One thing that worried Cathie a lot was that more and more stores were going bankrupt and closed. In the last few months, thousands of shops and restaurants have closed across the